Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and back in the saddle, Luke Lloyd. How we doing?
Man,
I'm alive and
he's here. Engaged, yeah. Big
Engaged.
event.
Hey, congratulations.
Congrats.
Hey, nice work.
You get the golf clap because we'll be talking about the Masters here in a little bit.
Yeah, that's why I almost just left the podcast room because they're talking golf. And it's the last thing I want to talk about.
It's the Masters. It's the best weekend of the year.
I mean, just throw your typical dart, either Rory or Tiger,
lost every time.
and move on. And Derek and I will have our conversation about, and it's okay. It's a small segment. We got you.
All right. Yeah, I'm glad to be back. I'm glad to be back and alive. It's actually beat me up missing the past 2 weeks. I'm glad you guys didn't talk too much crap about me. So, what do we got today?
Oh man,
What
do we have?
Action-packed show.
Yeah.
So we'll do the financial planning corner around the national debt skyrocketing out of control. So I know Tony has a bunch of takes on that one. We'll talk a little bit in the news. Obviously, CPI and then rate hikes or rate cuts or hikes. We'll talk about that. And the effects of some of that in this crazy economy that we're living in, what Costco's selling. So we'll talk about that. And then at the end, we'll obviously make some Masters picks. Very exciting weekend.
It's my favorite.
Yeah, absolutely.
It really kicks off the golf season.
Mm-hmm.
It kicks off spring. I love it. I'll probably
I can't wait to slice everything this summer,
All right. The national debt is just accelerating. Debt's over $34 trillion right now. The U.S. government has spent $3.2 trillion in Q1 of this year and brought in tax revenues of $2.2 trillion. The math on that is that we are running a $1 trillion deficit in the first quarter. Now, I want to just put in perspective like how big $1 trillion is. So, in 1 year, there are 31,500 million seconds in a year. In 1 year, there's 31.5 million seconds in a year. If I gave you $1 every second, how long do you think it would take to equal $1 trillion? 1 trillion, not 34 trillion, 1 trillion.
So $1 every second.
I'm going to give you $1 every second until I'm done, until I hit $1 trillion. How long do you think?
9 years.
30,000 years.
30,000 years, dude. Well, you
see, mathematician in my brain.
Yeah. Dude, 30,000 years. I'd have to give you $1, and we're at 1 trillion. We did that in the first quarter of this year. So put that in perspective. So, and now the interest payments on our debt have officially exceeded defense spending. I don't know about you, but there's not a lot of people in the world that like the United States. I feel like we should always be spending money on defense, but no, we're paying it on interest because the government cannot stop spending money, and that's a problem. Now, go ahead.
No, go ahead.
No,
you're on a roll.
I mean, the biggest
Tony
thing.
some butter. He's on a roll.
What this is really gonna what this is really gonna do is create a crisis for future taxes and our benefits, Social Security and Medicare, and that's why we have to, as you're planning for retirement, whether you're 40 years old, 50, 60, in retirement, this is a crisis. It will be dealt with, but not before November. November will be the reckoning day of what is going to happen. Are we going to continue down this crazy fiscal spending, or does Donald Trump get in the office and stop it? I have no idea. It would be interesting if he stops it. I don't think he can.
Neither.
Yeah. But what that means for you on a planning basis is that for the next about year and a half, you have an opportunity to take advantage of the historically low interest rates. They have never been this low since World War I. And with us piling up debt, there's going to be taxes. They're going to be going up. They're already kind of going up secretly. They're messing with marginal tax brackets and things like that. But when Donald Trump's tax law sunsets at the end of 2025, on 1/1 of 26, we are going to have new rules. And I'm going to predict that they are all going to be higher. Things are going to get crunched, and this is your opportunity as you're planning for retirement. This is your opportunity to, and I'll say the biggest headwind is trying to get money into Roth IRAs through Roth conversions. Because again, you may have to pay taxes. Taxes is a consequence of success, I've always said. But this is your opportunity.
Taxes are a consequence of the government getting bigger and putting the burden onto you.
Mm-hmm.
But yes, you're right.
It is. I mean,
I know. You're 100% right. I'm just saying, at the end of the day, taxes shouldn't be this high in the first place. And the fact that they are stems from the problem that you just were alluding to, that I kind of wanted to comment on, the debt problem that we have in America. Let's go back to 1913. The Federal Reserve was created. The whole world was different in 1913. People didn't they didn't have credit cards. Guys, just usually one breadwinner. Spouse, usually the woman would stay home, take care of the kids, raise a family. So the guy would go to work, get enough money to buy a house, get a grocery. Automobiles weren't around, so they walked to work or bicycled to work. Maybe took the bus, whatever be, or not bus, like a tram system, right? Because buses weren't around in 1913. So anyway, the whole economy was different, and we were an economy of hardworking savers back then. Now we're an economy of, if you want to call it hardworking spenders, and everything is attached to interest rates, credit cards. So the whole world is different than it was when the Federal Reserve was created with the intention of controlling demand in the economy through rates and other things they can pull to control demand in the economy. So things aren't working the way it was supposed to. When the Federal Reserve hikes rates to 7%, all that means to people now is, I'm not going to stop my spending. I'm just going to borrow more money at higher rates to continue my spending because I have access to credit now. So the world's different in that aspect. Then in 1971, we got off the gold standard. Officially in the United States. So therefore, our currency is no longer backed by anything besides the power of the U.S. government. And in that fact, that allowed the Federal Reserve to then continue to print more money and allow them to basically pull triggers harder than they did before 1971 once we weren't backed by anything. So essentially, that's what created this whole Ponzi scheme and has allowed the government to get bigger and bigger. There's two things. One, the Fed's creation, and then two, the getting off the gold standard in 1971. So to continue the Ponzi scheme higher from a planning standpoint, Tony, kind of what I think you were hitting on a little bit, and one thing I kind of wanted to bring into the conversation is you see a lot of like insurance companies out there and a lot of the banks of the world that are locking in some of these longer duration kind of investments. Like, you could buy a 30-year treasury bond paying you 4.5%. So the question you have to ask yourself from a planning standpoint is sometimes, what can you do from the longer duration side of a portfolio? Maybe a small percent, maybe it's 5, 10, 15%. They can continue to think about, like, how do I lock in and take advantage of these higher interest rates, especially if something else breaks in the economy where, rates go down. If we take away the liquidity into the system, eventually we do pull back government spending. That's going to be an economic deterioration. There's going to be bad things that happen because you take the Kool-Aid away. You're going to see deflationary aspects instead of inflationary. Deflation is something that will come into the conversation probably in the next 10 or 15, 20 years.
If the government continues to spend the way they are, it's going to create inflationary situation.
And if they do pull back, it's going to be deflationary.
Yeah,
exactly.
It's because I think one of the stats I saw is that the government created 100,000 jobs over the last year. Most of them for the IRS and Veteran Affairs. And this is here's my rabbit hole. I feel like it just looks so blatantly obvious, but this looks like the Democratic Party's full court press to get reelected. They are going to spend our money to get reelected because they're creating jobs artificially in the government, and they're going to allow illegals to vote. Like, come on. Like, I don't know. Maybe I'm wrong on some of this stuff, but that's how I feel. Like, there's a lot of concern that like a lot of these illegals are going to be able to vote, and they're positioning them. That's the conspiracy theory.
It's not a conspiracy.
That's not a conspiracy theory
I don't
at
know.
all.
I mean,
that's
like,
exactly what they're doing.
Like, Tony, that's not exactly true. I don't know, man. It sure seems like it.
There's a lot of numbers that support that.
Yeah. I just love the one TikToker. I'll let you, the one, but they're like, I've just made money and I got taxed. I go out and spend it and I get taxed, so I'm double taxed.
Well,
like
this
wow, wake up.
I'm pretty
call.
sure we fought a war over this 350 years ago. You know?
Yeah. Taxation.
Yeah, what were those tax rates? Do you know?
I don't know.
Like 3 or 4%.
I'm gonna get pissed. I'm gonna get pissed off and throw some tea in the ocean.
Real quick through some.
The tax on tea, I think, was like 3%, and that's what caused it.
Let's go through some history. Income tax wasn't created until like 1856 or 1860. It was right like during the Civil War. It was right after the Civil War to pay for the reparations and all that stuff that we spent all the money on that. So that was why income tax was created, and it was originally at a rate of 1%, and then the top rate was 5% if you were like really wealthy. I mean, this is how far once you set a precedent. This is why we talk about precedents all the time in this podcast, like free money, things like that. Once you set a precedent, you can never go back, and that's why we're in the issue we are.
If we keep spending at this rate, taxes are going to probably double. Don't you think?
That's a bold statement. That's a lot, but I mean, it's not out of the cards.
I mean, 1980s,
we're running a $1 trillion deficit per quarter now.
So, I mean, so think of it. Think of it this way: if Trump's tax laws sunset and nothing happens, which I doubt there wouldn't be, the new regime will come up with their own set of rules. But if nothing happens, they can't figure it out. It will revert to the Obama tax rules or tax laws, and if that happens, all of the marginal brackets will increase 15 to 25%. So it's not out of the cards, D. Like it might happen by osmosis,
right?
Because if people just messing around, worried about paying for other stuff, they just let the tax law, sunset and no new law put into place. That could happen.
Well, I think we're gonna go probably back to like the early 1980s or something when the top marginal rate was like 90%.
Yep.
That's crazy.
We're going back, baby.
That is crazy. Yep.
Need that money.
Yep. So it's something to definitely pay attention to, especially if you're approaching retirement. It's a very important part of the plan to at least account for taxes potentially going up in the future. And if you saved all your money into, kind of the tax deferred bucket, like in your 401k, your IRA, it's probably a good idea to take a look at some Roth conversions. Obviously, it needs to be done through a financial plan to make sure it makes sense for you. But Roth conversions and even some life insurance strategies, which we mentioned on the show before, have a potential impact to really, change someone's retirement plan for the better.
Well, and also because of these higher interest rates, what we talked about, and all this, flooding the economy with liquidity. These annuity companies that are insurance companies, like I just was referring to, that are locking in longer duration treasuries, are paying out higher rates now. So it's like there's different ways you can take advantage of that too.
Yeah.
Yep, for sure.
All right. Just be careful when you lock in long duration, because there's definitely a case for deflation.
Sure.
But there's also a case for hyperinflation.
Argentina.
So All right. CPI came in hot, sizzling. 3.5%, and again, most of it came from shelter and energy, the two things that most human beings need, right? Imagine that. I mean, you can throw in food too, but again, I just really feel that all of this government spending is the biggest tailwind for this inflation, and if they don't continue to taper it, we got a problem. Because it's going to create inflation.
It's so crazy how at the beginning of this year, 6 rate cuts were being priced into the market.
6,
yeah, and then we went to 3, and then we went to 2, and then 1.
And then one
basically
0 to 2 is kind of the range now of the one Fed speaker. What about a hike, man? I mean, I think that's highly unlikely, but I don't think it's not out of the cards.
Me and Matt, one of our team members on the investment team, were talking about the politics within the Fed. And the end goal, if you're a Federal Reserve governor, is to eventually probably get a political position within the administration, whether it's Democrat, Republican, whatever your politics are. The end goal is a politically driven goal. And these all these governors and all these presidents of each Fed, they want to be heard. Like, they like being in the news. And it really doesn't matter if what they think or say is truly true. It's like, as long as it makes the headlines, that's what matters. And frankly, we have an unhealthy obsession right now in the investment world with the Fed. Like, it should be more about company earnings, like the fact that companies are making money. That's really what should matter, right? It's not that whether we hike rates or cut rates. Like, at the end of the day, we're so observant of what the Fed does, it's almost unhealthy. And every federal, president has like their own different opinions, which is also unhealthy because it's like you don't know what's true and what's not.
Yeah. It's crazy. Because of these interest rates, the predictions of hikes and no hikes and things like that. I just saw like this year was supposed to be maybe the mean reversion is what I would call it, because large caps outperform mid caps and small caps by over 10% last year, right? I think S&P was up 24%, and mid caps were up like 10 to 14%.
Yep.
Year to date, small and mid caps, the Russell 2000 is up 0.5%. It's getting crushed today because of the
CPI.
The CPI, because the CPI is then going to cause the Fed not to cut, and small and mid cap companies need the cut. They need smaller interest rates because they're the companies that usually burden the debt, and large caps are up 8%. Another just the continuation of disparity.
Yep.
That's crazy. But I'm off my soapbox. But CPI, I mean, it's going to be interesting what they do. I don't think they're going to cut. I don't know how they can. The inflation. I mean, the cycle is that it always does kind of reaccelerate, but I mean, cutting is only going to make it worse, in my opinion. So.
Yep, for sure. It all comes back to government spending, which no one in the Fed seems to want to talk too much about.
Yeah.
They talk for hours and hours and hours and just kind of gloss over that.
All right. Another topic. Costco. We talked about this. They're selling gold bars. But now they said that they're selling over $200 million in gold bars a month. Where are they getting all these bars? Who's giving
Born
them
down
this?
to Fort Knox.
Where are they getting this?
I don't know. I see those commercials on Fox Business. They say they're running out of gold, so I don't know.
Believe it.
I don't know where they're getting it from.
I don't know. So why are people buying gold bars at Costco? Like, because where else would you get it actually on TV? Or I mean, I know you can go to a broker and get yourself a bar of gold and stuff, but like, it's readily available at Costco. Like, I can get some patio furniture and a gold bar. Like, why not? Right? Is it more? Are people buying it as a novelty or for fear factor?
It's got to be fear factor, right?
I don't think so. I think people are just buying it because they're, I don't know, they're at Costco and they're like, oh, gold bar.
We're gonna go back to the good old.
They
barter
don't
system.
just have gold bars sitting in the aisle next to the coffee.
What do you have to
pods.
do? Put an order in, and then the Brinks truck drives it to your house. What happens?
I
How's
would
this
think
work?
so. Yeah.
So, but think about this. They can't. Like, you make a very good point, because I thought about this, D. Like, they can't have just gold bars laying around because it is a volatile it's a volatile commodity.
Mm-hmm.
I mean, it's been going up, but it has crashed in the past. I mean, Costco's not going to go buy a bunch of gold bars for $2,400 and put it on the shelf, and then tomorrow it's worth $1,900.
It's called you hedge against gold futures, and then you start buying gold.
Is that what Costco? I mean,
I don't
they
know if
might
that's
be.
what they're doing, but they could be.
I don't know.
They
Maybe
could have some trader in the back like our Robbie Markets and
Robbie.
buying future con swaps on their gold positions.
Yeah, I mean, I thought Costco was just there for the crab leg index. Now it's there for the gold index. But how do they profit on that? Like, how do they
basically just acting as the broker, right?
Yeah, I mean, that's how they.
It's
have
like
to.
if you go buy gold online, it's like, there's going to be a markup, a couple % markup for whenever you buy it off of the person online. Same thing Costco is doing. They'll buy it and then mark it up, And then, frankly, people will buy it, whether or not it's dropping 2 or 3 or 4%. Like, people are still going to buy it as long as there's no drastic big change.
Yeah,
right?
I mean, I apologize. I usually come to the table with like how this actually happens. I like to know, but I saw the headline today, and I'm like, we got to talk about that because I just think it's crazy.
I've got it. So they have. So it's not gold bars, like from the cartoons. It's 1 ounce. It's the 1 ounce.
Coins.
It looks like a coin basically. Yeah. But yeah, dude, they got them right in the cases with the watches. You know what I'm talking about?
Yeah.
Like right at the front of the store. Yeah, that's the picture I'm seeing right here, right next to a nice Luminox. So get yourself a nice, military grade watch, and then pick up an ounce of gold for $2,300. That's wild.
I mean, how do you
check that out?
Do you want to? I mean, do you really want to walk out of Costco with a $2,300 gold bar in your pocket?
You just throw that on the Costco credit card. I guess you get 2% back for that transaction. That's pretty good.
Enjoy that $40. Cool. I don't know.
Is Costco a gold stock now? Like, can you buy Costco like GLD?
Jeez. Anyway, but the one thing I did hear somebody talking about gold this morning and its rapid rise lately. I think it's up 20% at least.
Gold, Bitcoin.
Yeah.
So you have these defensive names and commodities that are performing well, and the market's all-time highs. All right, I don't want to be I'm not going to be negative. I'm not going to be scary. What's that movie on Netflix with Julia Roberts? That one new movie with the world ending or U.S. kind of getting. Anyway, during that movie, one of the guys there is a financial advisor or investment banker or whatever. Being in my world, I can see things before they happen because all I need to do is look at the market, what's going up and going down, and I can kind of get a story and sense of what's going on. So the story and sense with this is why is gold and all these defensive names hitting all-time highs, at the same point in time that, markets are hitting all-time highs. And is that signaling something, right? So that's something you have
large
to pay
caps hitting
to.
All-time highs.
Right.
And small and mid caps not keeping up.
Right. So what is that? Is that saying that we always say when times are rough, you want to have a bigger boat. When the waves are rougher, I actually have been on a cruise ship when there was a hurricane. It was pretty freaky and scary. I thought I was going to die, but I didn't. But I'd rather be on a big cruise ship than I would want to be on a small boat during a hurricane, right? So it's maybe that's signaling something too. I don't know.
Yeah, I mean that's why people are piling into large caps because they don't. They're
the
just safer, right? But the one thing on the gold thing is that it's been on the rise, but it's been mostly by a lot of foreign players buying it.
True.
Not many people in United States, not many United States agencies and things like that are buying gold.
Russia's buying it at the all-time, the most
buying
ever.
At a huge clip. Yeah. All right. Well, fun stuff. Debt, inflation, gold. Let's talk about the Masters.
Yes, let's do that.
All right, so we're gonna pick our top tier, one mid tier, and one dark horse bottom tier kind of player. So one thing I would say about that I do a lot of research for, DraftKings. I like playing a couple lineups and things like that for fantasy golf, and so I'll read up on it. The crazy thing is that Augusta is actually the most predictable course or tournament of the year. It's usually always the same players. A top 20 player always wins historically, and it's crazy. Not a single rookie I don't believe has ever won. A player playing in that tournament for the first time ever, and recent form is also a key indicator. So experience winning there, recent form, and it better not be your first time. Those are kind of the crux of finding a good somebody that could win the tournament. So with that being said, Luke,
yep.
who do you like?
I'm taking Jason Day. Columbus boy.
Okay. I'd count him as a mid-tier guy. He's not that top 20.
I don't care.
That's who I had written down for my mid, so I'll pick someone else. Yeah, that's a good pick.
Oh, man.
I'm taking him as my top pick. You know, I know his odds aren't great, but
This late in the draft.
I'll tell you what, man. Ohio is one of those states like people from Ohio, us Ohio boys. You know,
Yeah.
you don't want to. When we're
Don't count
underdogs,
us.
we
Don't,
win.
don't count us out. All right, I like it. Do you have a top guy?
McElroy.
I predicted that Luke was going to predict that.
Did you bet on it? Did you win money?
I should have.
No,
All right.
he's on the cover of like the game I know 2 years ago, so that's my pick.
I feel Rory's just gets such a beat down from like all the live players. Like, man, they just really beat on him because he called them all out saying, "Oh, you guys are ruining the game by leaving and taking a bunch of money."
Yeah.
And they're like, "No, you're just stupid because you didn't take the money by going to the live." Anyway,
They really got to fix that live PGA thing because
somebody just told me
it's
they
real
merged.
bad.
somebody told me
Well,
they merged. I don't even know.
There's still they merged in principle, but there's still no framework.
Yeah.
They're still fighting. Like, all of the good players aren't in the big tournaments.
Yeah.
It's really hurt the PGA. I used to, casually watch on weekends when I was around, but I've barely paid attention to it. I've probably thrown on the live more than I've thrown on the PGA.
Really?
Yeah.
I've not watched a single live turn. I watched like 10 minutes of one, and the course that they were playing at was a dog track.
Yeah,
like it was like they do not play at good courses for some reason or another. I think it's like, I guess it's more of like not a banishment, like
right.
Like the good courses aren't going to allow that because they're usually probably getting a kickback from the PGA to keep their courses in the
for
fold,
sure,
right?
100%.
Anyway, what do you got, Lee?
So I'm always gonna take Brooks Koepka. He's my guy.
Wow.
He hasn't done anything lately, so
he's coming in hot.
yeah. So I really like him for my top pick. And then I'm going to replace Jason Day with just another name who's, more towards the top. Joaquin Niemann, the guy from Live, who's like really, really good. I'm very interested in. He got an invite to the Masters basically, and he's been playing all around the world trying to get enough points to get in there.
Well, he's playing exceptionally. His form in the Live right now is exceptional.
Yeah.
Like he's in the top 5 every tournament. You watch some of these other guys, like they kind of come in and they'll finish 25th and then 5th and then drop to 30th, and this dude is top 5 in the last 10 tournaments there. Like, he is playing exceptional golf, and I don't think this would be his first time playing the Masters. I don't know that, but the only thing I would say, if he is a rookie, that might not be.
Yep, no, definitely not. Just a guy to keep an eye on, though. Yeah. I think the people who it takes a while to learn Augusta, is what they say.
Yeah.
So yeah, from that standpoint, it would be difficult to pull it off, but he seems to have that drive and desire to really want it. So I'm interested to see him go. And the Live had an incredible showing last Masters as well. I think didn't Phil like come in third or something?
He had a late Sunday historic like 8 under. He shot up the board. The Live actually was. I mean, I'll mention it right now. So here's like the top guys. So like Scotty Scheffler. He was 4-1. I got him at 9-1 a few weeks ago.
Nice.
I got my little future bet in. Yeah.
Should just take cash out right now.
Right as he was about to win a tournament, I'm like, all right, I'm gonna go fire off a Masters bet. But here's one thing. So another prediction is that usually the chalk has never won the Masters, and Scotty Scheffler's the chalk. So maybe I'm just lighting money on fire. Also, Scotty Scheffler and there's another guy, Sam Burns. They're both of their wives are expecting babies here within the next couple weeks.
Tony's got all the inside track.
And if they both said, they're like, hey, if my wife goes in the thing and I'm leading the Masters going into the final day, I will not be there. So you got that going for you. I'm gonna go. So I mean, you got John Rahm, Scheffler. I'm gonna go with Xander Schauffele. I mean, he's always played well at the Masters. So I'm gonna go with him. He's in great form, and that's my top tier. My mid tier guy. I mean, we just talked about a live guy. I really like Patrick Reed. He plays well at the Masters.
Yeah.
I think Terrell Hatton is always a great ball striker. He's a live guy, but Matt Fitzpatrick, the Gala are also good mid tier guys. But I'm gonna land on Patrick Reed. Like, no one's talking about that dude, but he's always in the top 10 for the Masters. And then my bottom tier guy, dark horse, go with my boy Siwoo Kim. He plays well at the Masters too. He's been known to roll the rock, hit the ball well, and there's my thing.
That's a pretty good one.
Yeah, so Xander, Patrick Reed, and Siwoo Kim.
I'm gonna throw Justin Rose in there for my long shot.
Okay.
He always plays well.
He plays
too.
well there too.
I'm in third Tiger Woods is my long shot.
Yep. He's 150 to 1.
Another thing, I believe it's supposed to be windy there all week. So having some of those European players, like Terrell Hatton or Matt Fitzpatrick, they play well in the wind too. So
I don't know why I didn't try harder when I was younger to be good at golf. I could be just on the course every day, having a nice little beer afterwards and enjoying life.
I wish I would have gotten lessons early, because I taught myself how to golf, and now I have this horrific swing that I just band-aid the hell out of every year.
Yep.
I've become a better putter and chipper because my approach game is just not that great. I get off the tee.
If someone would have told me how much money you make in golf, I would have tried a little harder.
You're playing baseball, man.
I was playing knuckleballs.
Yeah, that's right.
The watch and
someone should have
awesome
told me that
too.
making it to the majors and baseball, Division III baseball, and throwing less than 80 miles per hour probably wasn't going to happen.
Yeah. Or the wheels up, you get free. Just hop on a PJ to your next tournament rather than hopping in your car.
Absolutely.
That's the American dream right there. All right, guys. Take us home, D.
All right. Well, good stuff this week. Thanks for listening. If you have any questions, comments, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.